Welcome back. Things are cooling off very, very fast. 19,000 is history on the bank nifty now. It's a 363-point decline on that index, and the nifty is now barely in positive territory, just 12 points on the upside. So before this color changes, let me quickly talk about the gainers. Mr. Tulsian, let me take the question to you. Is this move that we're seeing in auto stocks, is it just a trading bounce, or do you see any sustainable play here from a portfolio positioning point of view?
So maybe I won't call it purely a trading rally, because if you see the statement given by Hero Moto, that is seen to be quite promising, that the retail outlets to the extent of 30%, that is 1,500 retail outlets have opened, and they've already sold 10,000 two-wheelers or vehicles, which is seen to be quite promising. Because there are 2 points. One is the production by the OEMs, and then that production must get sold off. And if the situation on the ground is seen of about 30% dealership opening, that is seen to be quite remarkable. But having seen the across the board 8% rise, because we have been keeping extremely positive view on two-wheelers, more especially on the Hero Moto. But if you go by the rise which you have seen in the share price today of Hero Moto, Bajaj Auto and TVS Motor, all three are up by 7 to 8%. Similar is the case with Maruti, because in the passenger vehicle, you can only take a call on the Maruti from an investment sustainable rally point of view. So probably because we have been taking a buy call on Hero Moto from 1800 and so now it is at 2100. Obviously, maybe a couple of days, allow 1 or 2 days to rise further, and then you are going to see the profit booking scene coming in, that people will start taking a call that what will be the sales kind of things, what is the valuation. But yes, if you have a longer term horizon, maybe of about 6 to 8 months, and probably allow the shares to, we won't advise the buying into the auto stocks today, more especially in 3 or 4 stocks. That is Hero Moto, Bajaj Auto in two-wheeler, and Maruti Suzuki in the passenger vehicle space. Then these three only can be looked into, but not today. But the sustainable rally can be seen not in the near term, but over a period of 3 to 6 months or 6 weeks.
Okay, Mr. Tulsian, finally, before we let you go, Reliance goes X rights day after. Tomorrow is the last day for those who want to, buy from the rights point of view. But is it too late now to buy Reliance? What would be your call on the stock?
Anuj, definitely it is too late for buying the Reliance Industries from rights point of view. Now, let me just explain here that there is a differential of about 300 rupees between the rights issue price and the market price, that is 1257. And if I take ballpark at 1257 or 1280 at which it has been ruling at, and the ratio is 15 to 1, that means there is a rights premium or inbuilt value differential of about 20 rupees per share. But if you go by the way it has risen, it has already risen by about 33% in this last 1 month. And I don't think that there is any meaning in chasing the momentum now. Because if you see the counter on Friday, the share saw delivery of 1.25 crore shares. And if I see now in fact in this last 20 minutes, there is definitely indicates that the people, those who have bought it earlier, wish to exit. Maybe the hedge funds seem to have taken the lead in buying this quantity, and I won't be surprised to see, because retail shareholders, which are seen to be about 23-24 lakhs, they are seen to be very possessive, very excited about the rights issue. They don't want to part with the rights issue, the shares now before the record date. But once this rights issue record date, the X rights will happen from day after tomorrow, that is Wednesday morning, then definitely the selling pressures will start happening along with the hedge funds which we have seen having bought earlier. So 1600 rupees or 1650, in fact, has seen having tested by Reliance Industries twice, one in the month of January and again today at 1615. That seemed to be its resistance. And 10 lakh crore market cap also, which we have been keeping as the resistance for the stock, has happened. So I don't think that now there is any risk reward in going for buying the shares from rights point of view, because rights proportion is seen to be very minimal, and allow the 20 rupees to get adjusted in the share price on the X right basis, and look to buy the share again maybe at a level of about 1500, and avoid buying now the shares at the current level of 1580.
All right, Mr. Tulsian, we'll leave it there today. Thanks a lot for joining us. The market, by the way, is now at low point of the day, and in fact the Nifty is in danger of slipping in the red. Forget about the bank Nifty. The Nifty is clearly cooling off now quite a bit, and if you see the move in the last few minutes of trade, it's basically the bank stocks again, but because the weight is so much of stocks like ICICI is now down 5%. HDFC Bank actually is putting a lot of pressure in the last few minutes of trade. Lever has slipped quite a bit. Then there's Tata Motors as well from the highest point, that's also slipped quite a bit. So there's some pressure on the market. No two ways about that. Well, we have our next guest joining us now. Atul Bhole, Vice President and Fund Manager at DSP Mutual Fund, is joining us. Atul, hi, good afternoon. Thanks a lot for joining us. Your thoughts on what's going on in our market, especially in the large financials, where once again we've started to see large amount of selling.
Yeah, good afternoon, Anuj. Thanks for inviting me on the show. So I think coming to financials, I think market by and large is very clear that we are going to see some asset quality issues on the financials. Nobody obviously is talking about growth for FY21. The main question is about asset quality. And on asset quality, obviously, as the COVID spread is increasing and the lockdown periods are getting extended, the worries about asset quality is obviously going up. And that's why that's what I think is weighing on this financials. So till these concerns are there, I think the financials are going to be under pressure.
The question is, how bad, Atul, can it get for financials? You know, most of the large banks are now saying that up to 30% of their book is under moratorium. NBFCs have their own financing issues. Now, you, in most of your funds, you have participation from both sides. I mean, you have lots of large banks. You also have exposure to large NBFCs. Is there any rethink, especially on the NBFC strategy now?
Yeah, Surabhi, I think we are holding on to the stock selections. I mean, the stocks which we have selected from the financial space, the large private banks and one or two NBFCs. We are comfortable with this holding, especially after the corrections of 30 to 50% they have undergone. If you look at all these banks and NBFCs, if you look beyond this near term, obviously there are a lot of uncertainties, but all these financials are very well capitalized. They have liquidity on their balance sheets and they are very well prepared in terms of infrastructure, technology and management to take advantage of the recovery whenever it happens. I mean, there is no clarity when the normalization will happen, but I think these financials are fully prepared for that recovery. And I think till now, whatever estimates we are going through, none of these financials are going to report loss in FY21 also, even if there are NPAs to go up significantly. I think because of their significantly higher PPOP number, pre-provisioning profit number, I think the losses may not be there, at least even in FY21. So to that extent, there is no erosion to book value. So we are okay holding on to these stocks. I mean, especially after this kind of correction, there is no point in avoiding these stocks.
Okay, Atul, what about the fund flow picture? Since you manage some of the most successful funds, has there been any kind of redemption pressure that you've seen over the last 1 month or thereabout, especially in this recovery in the month of April?
Actually, during the month of April, we were seeing good inflows, net inflows into the funds. Of late also inflows are there, but the quantum of inflows, I mean the net inflows is going down. So fortunately, we have not seen big redemptions. There were net inflows, but the quantum definitely is coming down as we see the increase in the COVID cases and overall sentiments in the market.
Okay, so just a related question then, Atul. What about cash levels within your funds? I mean, are you following a strategy of slightly raising cash, or are you looking to be fully deployed?
Yeah, definitely, Surabhi. We have raised cash levels into the funds. Basically, what I am actually thinking a sort of contra in this market. I know market is running after some of the FMCG stocks and pharma stocks, but fortunately we had a higher level of pharma and FMCG earlier on, and actually I booked profits in some of those FMCG and pharma stocks and raised the cash levels. So currently we have almost 8 to 10% cash in most of our funds.
Okay, we had numbers from Shree Cement, and in general, cement companies are saying that there's a big pressure now, especially on real estate. Your thoughts on some of these domestic economy facing stocks, Atul? How much more pain will we see, and how much of this is now in the price?
Obviously, see, Anuj, even before this crisis started, domestic economy was going through a slower pace of growth. The GDP growth number was already low, and many companies were showing similar trends, slower growth. So I think lower growth was always there. For last one and a half year, we are dealing with that. And obviously for next maybe 6 months, 12 months, the trend will continue. So what we can do in this scenario is basically select the best of the companies and best of the management who can navigate with the situation in a better way compared to their competitors. So I think I believe most of the selection I have in my funds, these kind of companies and managements who can deal with the situation much better compared to their competitors. So I think these companies eventually will come out winners from this crisis. So I am betting on that. And obviously, there is no denial of the fact that we will struggle for growth for next 6 to 12 months.
All right, Atul, thanks a lot for your time today. Stay safe. Thanks a lot for joining us. Well, by the way, I just want to revisit an interesting story. Reliance today came within 2 rupees of an all-time high. After that, of course, it slipped on profit taking. But what's interesting is that in the rally that we have seen in stock markets, Reliance is the only non-American company which is in the top 5 in terms of returns, and that's dollar terms. Prashant, that's an interesting one.
Absolutely, Anuj. Reliance is the only non-American company which figures in the top 10 best returns that we've seen. So this is basically what I did. I looked at companies with market capitalization greater than $100 billion. I filtered it down to basically all markets. I did not exclude any particular market. And then I took a start date around the 23rd of March. 20th of March, beg your pardon. Markets bottomed around that time, 23rd, 24th, around that time. So for the purpose of this analysis, the start date was 20th of March and the end date was the last closing, today's price change excluding. And all returns are in dollar terms, not in local currency terms. Not that that would have made too much of a difference because there is only one Indian name which I found amongst the top 10 best returns globally. So this is what I found. And the list is up on your screen. Along with companies like, Chevron, Exxon, Facebook, there is Reliance Industries at number 5, right? Amongst the top 10 players out there, Reliance is the only non-American based company which finds a mention. If you exclude the list to include the top 15 returns, then Reliance is the only Asian company which finds a mention in that list with that 53% return that we've seen on that particular company. The only other sort of non-American, non-Asian company is a European company which finds itself in the top 15 list. So, in any way that you cut it, and you can take the start date as the 23rd or the absolute low on the 24th, I don't think the returns and the difference will matter that much. Reliance is the 5th best performing stock globally since the lows that global markets hit around mid-March. That's the takeaway from me. Back to you guys.
Okay, all right. Prashant, thanks very much for getting us that interesting update. In the meantime, by the way, the news in the market continues to be one that favors the bears rather than bulls. Sensex in the red, Bank Nifty down 2%, Nifty barely in the green. Let's take a very quick break. We'll come back on the other side, and just a reminder, we talk technicals with Gautam Shah in just a moment.